Hello, everybody. Are we here? Are we live? Nope.
All right, good morning. Hi, good morning.
Afternoon.
So used to saying good morning. Good afternoon, guys. Hey, John, we're gonna cut in here if that's okay with you, my friend. I think he said okay.
Well, he
All right.
disappeared. So
He disappeared. All right, so we kicked John off, our good buddy John. All right, Peter.
you
How
got
are
a
you, my
frame and a
friend?
half here of me.
Yeah, no, I see that. I'm gonna fix that right
What's
about
going on?
now.
I'm taking over your screen. Okay, guys. Yeah, we only have like 2 minutes here. So real quick, expected rate decrease of 1/4 point. New interest rate. They expected a 4.25. So we'll see what happens. If again, we're not going to hear the news until after we see the reaction in the market. It's the way it always works. The market will react pretty instantly, right at 2 o'clock. We'll have to make an assumption. The news will probably come out a minute or two later. So we'll keep an eye on that and see what we see.
Yep.
And then we have the lovely press conference, which, Carlos, I'm not sure if you're planning to bring up a link that we can like listen to together, or we'll just listen offline. But yeah, the press conference is probably where we're going to get more information and more market movement related to whatever the decision is. So now about a minute away here. We are going to find out together.
Yeah,
What the
yeah.
future-
We'll try to bring in the conference in here so we watch it together and see what takes place here.
We don't have a screen in the chat room.
Oh, let's get the screen in the chat room.
And it's
it's
all black here on YouTube.
Yep.
Hello?
Fix you.
All right. Carlos is frantically working on things.
Yes.
Trying to get the screens all going. All right, guys, 30 seconds. So exciting. The market getting a little bit of a poke higher. Watching the Qs and the SPY. Said the primary stocks, I'm going to trade a stock, not the market direct. Although maybe I should just try and trade the SPY or the SPX.
I was thinking about that. I don't trade at this time, but it will be interesting to see how things go here.
SPXL. I could take it's an American stock exchange stock, though.
Here we go.
All right, here we go.
What we have?
Bopping higher. Here we go.
Nice.
Up.
All-time highs, everything. Why not?
So I've got to presume that means that rates came out as expected. Now we often see this type of reaction where it immediately pops.
Yeah. See how it goes here.
The Fed cuts the overnight rate by 25 basis points. So they did what was expected. Okay, so that's good. That's good. Where everybody thought the market was going to go. Now the question is, being that that was already roughly priced in, are we going to go back down, or are we going higher?
Let's see here.
So I've taken a short trade, taking a partial here, moving my stop to break even.
On the SPY, Peter?
I decided to trade the SPY directly, yeah. So, and because I know that we usually revert back to where we started from, so I'm going to take some more off here just because this could pop on me.
Very nice, man. Very nice.
Trade. Oh, I'm not in such in a way that I can share a screen, am I?
No, you're not.
So, but anyways, I got short at 660.35 on the SPY, and took some partials below 660. So making a little bit of money here. Hopefully, I'm not sure how much lower we're really going to go. If it comes back up to my break even, I'm just going to let it stop me out. It's pretty close. There we go. So I just got stopped. So no problem with that. just taking it because usually that's the experience I have, right? We pop up or down in one direction, then we usually retrace back to roughly where we started from. Now, I don't know what the market's going to do. Now we've got
Yeah, now we that's it.
about half an
Just
hour.
out of the way. What's next? What's this is what we wanted. Well,
So,
what are the fireworks?
so it was confirmed that the overnight rate was cut by 25 basis points. The Fed Reserve press release, blah, blah, blah. Let's see what they say. Yeah, decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%.
Look at the
The committee is
SPY
strongly
go.
committed to support maximum employment and returning inflation to its 2% objective. So, that's they've stuck to that line for a long period of time. Oh, we're going higher now.
Yeah, no,
Okay,
this thing is rocking. Look at that.
a little bit of a move higher.
Looking at some of the
Let's see
stocks I
what.
was watching earlier, see there's anything that what is POTR doing? My charts are looking weird. Let me reopen them. Something's weird with the charts. Let's see.
A little bit of a little
That's
bit
a little
of
better.
exuberance here.
POTR. Is this the first? Yeah, it is. Of course, it is the first time this year. MMT. Yep. Been talking about this for so
Uh,
long. Finally got it.
yeah. All right, so we're here.
So you guys mentioning hood in chat. Yeah, it's breaking out nicely here. Um, Same thing. Tesla going green as well. Another one that's doing pretty good. I want to take a trade, but I know I am so out of my normal trading time.
Yeah.
I don't want to force anything.
Yeah. I just actually tried another short on the SPY and again stopped it when it got to my break even. Because again, if they want to be very, if they want to keep pushing this thing, I don't want to get caught on the
Mm-hmm.
wrong side of it.
Yeah, agreed.
But there could be opportunities. Short for a third time.
On the
It's
SPY.
it keeps coming back. Yeah, it keeps coming right back up to my entry. That one I was never read on it. I got in and it dropped immediately, but then came right back up. So
Okay.
I'm really just trying to play momentum here, right? As I see the
Yeah.
momentum weaken,
Yep.
but very short term because I'm not used to trading the SPY directly, so I don't know what it feels like. Um, and I am short biased, so yes, I'm trying to short these.
I mean, this is a great place to short if at least for a pullback. It could be long all day, but at least for a pullback, given the big move, like on the 5 minute, you could clearly see it. Look at that, right? That's playing nice for you. If it goes under 661, it would be awesome. Let's see if Tesla does something here. All right, then we'll wait for Powell. Powell will be on at 2:30, and we'll see what his comments are and how that can have another effect on the market as well. Wow, things are looking a little weak here. Tesla red. What's our good buddy Nvidia doing? Nvidia also dropping. Oh, Peter, you're in, man. You're loving this one. We lost Peter. Peter was a good man. Peter was a good man. So good short for him. If I think he should still be in this, going under 661, 660. That is awesome. Yep, we lost Peter. Peter was good to us. Bob is moving. Yeah, a lot of things are moving. INQ's back. I mean, it's just I clearly don't have a strategy for this, so I'm just trying to play momentum, scalp something, but I clearly don't have a strategy here. Uber, Baba, CWD. Oh, this is that garbage. Wow, back down to 7, as high as 11 today. So back down. What about Baba for a play here, huh? For the breakout. Doesn't have great volume. Out of all the things I could trade, this is probably not the best one. INQ came back to the VWAP. Tesla lower. Nice engulfing on the 5 on Tesla too. Like this can be pretty nice. Does it keep dropping here back to 417? It's the recent low. All right, Peter's back.
What happened?
I don't know. He just said bye to us.
I was busy talking to myself.
How's that trade going, man? He's parceling.
I don't know when I lost you, so I have no idea which one. I've taken 4 trades and been stopped out.
The last one you took was above 661. You're still in this one, right? Because you got a good entry. You got in pretty high on this red candle.
I got stopped out at the top, and then I got in and added to it. You probably missed that whole trade.
Yeah,
and then it popped back up and stopped me out again. So, so no, I'm not in anything right now. I am green across all these trades, and I'm being very risk adverse on this because I don't want to get stuck on anything. But
all right, friends, let's see what we got here.
Mr. Pydra, yeah, it's a lot of trades for me.
David says Apple still sucks. David's been trying to watch Apple all morning here. Yeah, it does. Yeah. Still sucks very bad.
I mean, look at that. Yeah, look at the chart on Apple. It is really not pretty.
Scary.
It is not pretty at all.
Yeah. So,
when it looks choppy like that on a 1-minute chart, you know it's not moving well.
That is as ugly as that new iPhone Air. So, yep. That's pretty bad. Man, PTR just lost it here. Short NVIDIA, VWAP, quick scalp. Beautiful. Yeah, that's the only way to trade this, right? It's just to get these scalp type plays. That's what kind of Peter's doing too, right? You're looking for these quick moves, quick partials, and
yep.
And that's pretty much what you could do.
Yeah, not. I don't love this price action. Tesla's like getting a move down here, though. The SPY is right at. Well, it just went red, so went back red. Maybe I should say.
Wow, you took NVIDIA short. That is pretty nice, guys. For those that short NVIDIA, that is an awesome drop off the VWAP. PTR, same thing. Drop pretty nice here. SPY's going red, just bouncing back and forth. Baba dropping. Everything is just. This is hard to trade. This is very. I'm trying really hard to get a trade here. I don't trade this. This is not my style.
No. These rate announcements, I find you either have to take a big long point of view and just hold with gritted teeth, or you do like what I'm doing and you're scalping, right? Very sort of quickly. The momentum either works or it doesn't. So I'm sort of lucky having tried it 4 times that I never got stopped out, because it could have easily popped against me and stopped me out for a full loss, right?
Yeah,
but it didn't. So
Richard short. Oh, we appreciate that. We're glad that we can help. He's short Nvidia here. This is very nice. Beautiful drop on Nvidia today on this news. Tesla. I feel like if I go short anything, I'm so extended. It feels out of place.
Yeah.
Out of
Yeah.
place at this
I would
point.
agree. My hands are off the keyboard for now because I don't see the
Yeah.
move.
Oh.
Keeping in mind that the markets are, holding some fodder for the press conference.
Mm-hmm.
That's this move, as big as it looks right now, is probably going to look small by the time we're done with the press conference. That's usually the way it goes. What you can see is, remember we were talking about how low the volume was, and even today, overall, the volume is only sitting at about 75 to 80% of average volume. But look at how much the volume has picked up starting right at 4 o'clock. Right,
Yeah.
you can
Yep.
see it on the SPY and the Qs.
Two
Of
o'clock. 2
course,
o'clock.
you can see it most obvious, but you can sort of see it on Tesla and Microsoft and Nvidia to a
Yep.
lesser degree, but and Apple, interestingly, not much at all. So Apple really does suck. But
Apple doesn't care about anything besides
no,
just
but
shop.
Google, Amazon, and Meta, you can all see that volume increase right at the 2 o'clock. So it's interesting how Apple seems to be the outlier, that everybody's abandoned Apple, it looks like.
Oh,
So
PLTR. That is
even
beautiful.
Oracle.
PLTR, Nvidia. Wow.
Yeah.
So nice. Oh, how is Oracle doing, by the way?
I
Oracle,
mean, it's
yeah.
down from where it was, but it's sold off. At least Oracle's reacting to the market. Apple's just, I don't know what Apple. Again, people just said they're done with it. It
Yeah.
really is
Oracle
not
at the
playing
open
along.
had a nice drop if you're watching it. I know people have been keeping an eye on it since it's been still somewhat in play from their big gap up. Look at this daily too. Every gap up has sold off during the day. They're still managed to stay above. Still pretty significant from this gap up they had, but giving some of that
Well,
back.
I don't blame my next entry was going to be, yeah, it's a shame. Shame, not in it. Had some connection issues. Had to fix
Which
that.
one?
Missed it. Well, I was shorting the SPY since that's what I was
Oh,
looking at.
fine. Yeah.
But I it had a good sort of ABCD pattern, right? An inverse ABCD that gave another opportunity for entry. But I said that's when I was dealing with the connection
Yeah.
problems. So, oh, Paris is loving Nvidia. Look, oh, of course he did. Of course he did. He got in short, is taking advantage of this. Now that's how you trade it.
Yeah.
You want to know how to do it? Just watch Paris, not me.
Yeah. Right. What do we have here? PLTR trying to. Oh, things are bouncing now. Well, some stuff is bouncing. How's SPY? Love you, Nvidia. Paris is funny. All right, let's take a look here. SPY. What do we got? What do we got? The bounce. This is Jared type trading, man. This is where he's going long or something like this. This is what he will be doing probably. Won't be surprised. Nor, you're back. Yes, we were thinking about you, man. You said short everything, and if you did, like you said, you're doing very well. Remember, he said he's gonna short everything at 2. So yeah, working out at least for right now. Yeah, I don't have a strategy at all. So just watching. Is Friday quad witching? I have no idea, Demi, but I know people in our chat will know. Is it quad witching Friday?
Let's see. The 19th. Oh yeah, look at that. That's a triple witching.
Triple, not
I
quad.
guess it could be quad. I mean, usually triple witching, quad witching, it's the same thing. It's just
Is
whether
it?
you pay
It is.
attention to all four measures or the three.
Hmm.
I mean, there's a triple witching day every month. The quads happen four times a year, and yes, it is in September. So I guess technically it is a quad witching day. So yeah, so it shall be. All right, we're getting a little bit of a bounce here. The press conference will be starting in, well, assuming it goes to schedule, because you never know on these things, right? But assuming it goes to
Yeah.
schedule, it should be starting in about 12 minutes. Maybe I should get my headset on and I'm going to listen to one
Yeah.
and hear what
We got it ready to
talking
go
about.
here.
Oh, do you?
Ready to start here. Yeah, we'll have it. We'll have the fee. I want to scalp something so bad. I want to be in the action, Peter. I want to be in the action, man. But
Nvidia
might
is
as well
moving nicely.
just wait here.
You gotta be fast. You gotta take bounces on this stuff, whether it's up or down.
Yeah. Yep. Mm. Okay. Maybe Tesla could be a good scalp. Again, scalping play. I don't know if it can get above the view up here, but yeah, I want to do this. I gotta calm down before I do something crazy. Hood is approaching VWAP. Yeah, so is Tesla now. Hood, same thing. A lot of stuff bouncing back. POTR also moving higher. Tesla is the one I like the most because it's right at the VWAP right now, and this is one where I like to trade if we can get higher. 5 minute is interesting too. Like if you look at the 5 minutes, just kind of not exactly between golfing type place here. So you at the drop in, at the pop and the drop, and then the continued drop, and then coming right back all to this area. So we are basically staying where we were at, which should be the case because we got what we'd expect. There's no surprises here. This could be a good risk to reward getting in long here. All right, and then towards the end, guys, hit the thumbs up over on YouTube. Towards the end, we'll give away 5 more books today. We got to catch up. 5 more books away today. We'll do that towards the end of the stream. 5 of Andrew's book, and that will bring us up to date with the days that we missed this week. All right, let's see if Tesla has a long opportunity here. We could break the VWAP. Justin, what did you take? What did you take the drop on the SPY? Peter almost caught the drop on the SPY.
Almost, but I didn't.
Almost, yep.
Almost only counts in horseshoes and hand grenades.
So Fed medium projections shows rates at 3.1 by the end of 2028.
2028? That seems like a long time to predict.
Yeah.
That feels very unreliable.
Yeah. That is very far out.
That's there's a lot of world events that can happen between now and 2028.
We need to focus on end of this year. How about that?
Yeah, no kidding.
And then they got, as you heard before, they got the one more Fed rate cut for this year. We're expecting so. Cool. All right, Tesla above VWAP. I don't know if I should just go in now or just wait for my VWAP breakout strategy. My VWAP breakout strategy really doesn't work this time.
We have 2.
So
We have
Two what?
two. I thought there was two. Two rate announcements to come. One October 29th, and then
Mm-hmm.
one December the 10th. So we have two left this year, I think.
So probably the next one the same, and then well, I guess we'll see what the data and how Powell's vibe is today.
Yeah. I think people have given up trying to figure out what color tie he's going to wear. He's just gone purple,
Is that
right? He
is
just
that still a thing? Well, I know he doesn't wear red or green or any positive colors
no.
or negative. He stays away from those, so
Yeah.
sticks to
I think
purple.
that's why he
Yeah,
just purple keeps it right in the middle. Nobody can criticize him of anything, or that's his intent, anyways. He's purposely stating this tie means nothing. It's just a tie.
yeah, exactly. Let's see. I guess I am waiting for a VWAP breakout because I'm actually waiting for the strategy. But he's going to talk in 7 minutes, so I don't know if I should even take a trade at this point. Could be wild.
Well, I mean, again, supposed to hit the podium in 7 minutes. Then you've got the fixed comments, which likely won't change much. Then
Yeah,
that's when things can
the
get
Q and
interesting.
A. Yeah.
So
All
the
right,
Q
let's
and
do
A.
it.
So
Let's just do it. All right, I'm long Tesla,
you,
and I'm just like,
oh my
why? But I
goodness,
am.
you, you,
All
you're
right,
just
let's.
you're just
That's just.
desperate to get something.
I can't be here. Why? That's why I won't go away and do other
You
things. I
got
can't be sitting
now.
here
That's
looking at
FOMO. You guys are
trades.
watching this live. That's FOMO,
Cut the
man.
feed. Where's
In
the
action,
cut the feed
right
here, man?
there.
Ah,
Huh?
see if we can go green. No, I do have FOMO because I should have got in when I said I was gonna get in, which is here, and I just hesitated. So let's see.
You're
Oh, Sam, you're in, but you're in with a good entry though. I saw when you messaged that you got in. You got in pretty early on, so almost a widespread virus.
yeah.
It
You're
is.
watching it here live, guys.
It is. Ernesto, get some help. Stop it. Love it. And as the palm tree says, just do it. Oh,
Oh, I've had it live,
at what
James.
life? What?
FOMO.
Oh yeah, we had that plenty of times.
It's
Not
you
often.
can't trade without.
Yeah.
No, but it happens.
Yeah. Exactly.
Absolutely.
Exactly. Yeah, I always get in with my stop in mind, Joseph. So and it's always around VWAP. So again, anything around VWAP is usually where my stop is for these breakouts. Um, yeah, volume is slowing down. You can see it here a little bit. We had the big spike already. It's just kind of relaxing itself a little bit. SPY's not making the big moves anymore. So
No.
we'll see. That's just coming back down. Below VWAP, I'm out of this. I was looking for the previous day close, which I might not get given this drop. All right, hands on the hotkeys. I might bail on this if it goes below that previous day close. Let's see if Tesla can hold here. Clean that up a little bit. Let's see. Where's the feed? I want to make sure we have the feed ready. Okay, there it is. I got it. Let me sure you guys can hear it. So we're ready when he goes in 4 minutes. In 4 minutes. Oh, wait. Why am I hearing myself? It's not good. Oh. Oh.
Hello.
I hear you.
Why
What's up?
does it keep disconnecting? I don't know what's going
You
on.
guys connected again?
Yep. I was busy talking.
In line with what we were anticipating, the Fed shifting in a little bit more dovish.
All right, there we go. So I got the audio, we got the feed. We're good to go when he comes on. Close to 230, I'm probably gonna take this off, even if it doesn't get to my stop, unless I start getting a cushion here. But it looks like it wants to go below the VWAP, and I don't want no parts of that. I'm ready to bail on it if it doesn't hold this VWAP here.
Fingers crossed for you, Carlos.
Yeah, it could. Yeah, who knows? It can go either way here. We got the SPY going higher. That can help me if it goes green. Hopefully. Oh, that's good. Let's go. SPY. Push my Tesla up. Let's go green if we can. If I would have got in where I said I would have wanted to get in, I would have been okay. Would have been actually
You could have
partial
added
by now.
when it pushed back to VWAP.
No, it's already a bad trade. Yeah, not max risk, but I think it's such a bad entry. I don't feel like adding assault to injury.
All right, fair.
Now, if I partial out at 425, I'm gonna say it should have forced me to add to this thing. You're not a good partner.
Yeah.
If it works out,
somebody's got to be to blame, right?
I got a point. What was that? Who sent us that that screenshot of Tesla? That was funny. I think it was Francis. I should have saved that. Whether if Tesla goes up, I'm a good trader. If it goes down, it's Elon's fault. You know, that's usually how it works.
Yeah.
Starlight Mansion could have been so much better. It should have been, by the time I wanted to get in, I should have been partialing here at 419. Right, so. So 100% agree with you. Time to add big time? No. Let's go, Powell. Come out with a green tie, and this thing will hit 450. We come out with a green tie. It's trying.
It is.
It's trying. As we wait for the man to take the stage here. I'm trying to get to previous day close. That would be awesome if we can get there. I'm just looking at the stream. Let's see, where's our friend? UTR, everything came back. Everything. Oh, look at Uber. Nice. Everything came back here. INQ. Ooh, I don't like how fast that drop happened.
Mm-hmm. It's a little much.
Yeah.
All right. Well, let's. Come on, guy. Come on, stock. Do it for Carlos.
Yes. Do it for us. Degenerates trading at this time. Who trades at 230? I'm not live. We trade at 230, but I don't trade at 230. I'm doing a degen move here. See if it does. Do something. Wow, is he late? Or is my stream delayed?
No, it's late so far. That's not a surprise. It's only
I thought he was pretty good on time. I can't remember what's the last time I actually
usually
waited around for him to do something.
Oh, apparently he's on. He's talking now, Carlos.
Oh, he is? Okay, so let me check my thing here. Maybe I'll delay a little bit. Check my feed. So I look at my trade. Don't say anything crazy, my friend. this demand.
Exactly.
Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force
Tesla?
due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But
You just said
it is also
short-lived?
possible that
They're
the
live.
Short-lived?
We're live
could
here.
instead
Live here on YouTube.
be more
No,
persistent,
In chat.
and that is a risk to be
Short-
assessed
short-lived?
and managed.
I think
Yeah,
you
that
missed.
was-
Our
You
obligation is to
you
ensure that
misspeaked.
a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027.
There's your 3.1.
This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Okay. So there you go. There's
Thank
the
you.
fixed
Chris Rugaber,
comments.
Associated Press. As you know, Fed Governor Stephen Myron
So,
has continued.
now we got all
kept
the
his position
Q&A.
at the White House, even as he's joined the
Yeah.
Fed board.
That's
This is
the
the
fun
first
part.
time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed
People
is politically
asking
independent with this
ridiculous
dynamic?
That's a stupid question. Somebody fired. Who is this guy?
Welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Yeah, don't answer that. Just move on.
I'm sorry. You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And, you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Thank you.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this:
Come on,
that
what do you think he's going to
over the
say?
course of
I
this
love all
year,
these
we
questions.
kept
They're
our
always
oil
so.
policy at a restrictive level, and
I wonder if
What do you
anybody
think the
can
meaning
ask,
of life is,
really restrictive
Chair
level,
Powell?
I would say.
Yeah.
You know,
So,
just
and
ask,
See if we
ask
get
a
a
bigger
Trump
question.
question in here.
over the
I
course
think we'll
of
get a
this year,
Trump
because
question
the
before
market
he's
was in
done.
very solid condition
sure,
with
absolutely.
strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
I love it. They're not balanced. They're moving in the direction of balance.
Colby Smith from the New York Times. Should we be viewing
that's a
today's
great
cut
statement.
as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see
there's nothing moving good. Everything is just sideways. You might not get
Yeah.
anything until the end of this, so we won't stick
Well,
around.
and so far he's
And now we
been
see the
very
revisions
good
and we see the
about
new numbers.
saying nothing
And
controversial.
I don't want to put too much
Right.
Which
emphasis
is largely
on
means saying
payroll
nothing.
job creation, but
Nothing, right,
it's just
right.
one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than
Y2K.
previously expected by the
Now
end
we're
of
going
next
back,
year,
Thomas.
and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up. Every year since
Now
2015, the SEP
we're getting into
has
risky
forecast
territory.
that you
I like
would
it
hit your
better.
target 2
Yeah.
years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for
Here's a
you
good, harsh
in
question.
telling people that that's what you're going to do if you
getting
can never
somewhere.
reach it?
Well, I mean,
Yeah.
you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least
Boy,
at least by the end of the
SPY trade
exercise
that I'd taken.
Yeah, it's nice.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller.
We did get a turn in the market here.
So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on, so that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months, and it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here?
Better questions now.
Good.
Thank you.
Better questions, yeah.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer.
Huge, I don't think
in
so.
In fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability, and so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss. We have a great discussion, and then we decide what to do, and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to
Markets
determine
are starting
that
to
the
drop
Fed
a
is still
little
making
bit here,
decisions
slowly
based
though. I mean, again,
the economic
look at the
outlook
size
rather
of
than
this
political
move
considerations?
since 2:30 compared to what we had at the initial announcement, as we predicted.
To do our work
It's
based
getting
on
bigger,
the
but
income
it's moving
data
slower. So.
And never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So,
and I still really wish I was just short.
You'll
from
know
that
it by the way we talk about what we're doing, by the
see
speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's
Friends,
all
I
we
opened
do.
up the giveaway, so hashtag
and we don't
BBT, and we'll
frame
give
these
away
questions at
5
all or
ebooks,
see
and that
them
gets us
in
cut off for
terms
Monday,
of
Tuesday, and
political
today.
outcomes. I think
So
when
if
you
you're
get
hanging
to
out here
Wow.
still,
Washington,
hashtag
Okay,
BBT.
there you go.
Through the lens
And we'll
of, does it
do
help or hurt
we'll do a giveaway in
this
just a
political
second
party,
here.
this politician,
On
that's
the
the
YouTube
framework.
feed.
And I think people find it hard to
Hashtag
believe that
BBT,
that's
and
just
you get your
that
name
is
in.
not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and they're making their arguments, and we're having a great discussion around these challenging issues. So.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
Yeah. Yep.
So on the QCEW,
that's what I'm interpreting, anyways.
The revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is
got a lot of hashtag BBTs going on.
Yeah, we got 71 entries. So
almost a predictable
we're going
overcount.
to end the stream here at 3
and
o'clock.
I think
so we'll
the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do
that book.
Of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But The data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data; it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks.
Other avenues, but I'm back in Tesla, man. I'm overtrading the.
Are you?
I'm back in Tesla. All right, friends. Let's give a book away. 103 entries. Lambos and Garbage Truck members get ×4. And yeah, let's do it, man. Today we gave a lot of stuff away. So here we go. First winner, Sergi. Congrats, Sergi. One more.
Sergey.
Mental Game. Congrats, man. Always a good member. Always in chat. Always active. If you won, if you won a couple of times already, let me know which one you have, which book you have. I got a couple of different ones I can give you. If you already have the new book, let me know, and I'll try to get you something else. So, Mental Game, congrats. How many we did? 3 so far? I lost track.
Yeah, Sergey, Mental Game.
Yeah, this is.
Hold on. Let me go back here.
Go back. Yeah, let's go back. I think we did 1. Sergi, Mental Game. Oh, just 2. Just 2.
Yeah, I think,
here's number 3.
It's just the 2.
Yeah, we don't want to cheat anybody. Philip Riley, congrats. Number 3, 2 more.
There you go. Okay.
Ivan, congrats. And here's the last one for an audiobook today. Michelle, congratulations to you guys. All right, I'm going to continue watching my overtrading madness here, but it looks like now I'm getting something.
now it looks like it's working.
Oh, man. Yeah, I'm going to take one partial here at 420, and we'll see if we can get to my target. All right. Tesla giving us a hard time. Friends, if you won, congratulations. Send me an email, carlos@bearbulltraders.com. I'll type it in here, carlos@bearbulltraders.com. And all the winners from today and yesterday, not today, and I think I might have some that from Friday. I'll send you guys all your emails today between now and this evening. So thank you so much. And Peter, not a bad day. Not a bad day. We had a decent morning.
Yeah, it was okay. I mean, not as many trading opportunities as I love. So
gotcha.
Yeah, it was, but not terrible. Just not great, I would say. So, anyways, we still got an hour of the markets. Let's see what the markets bring. Guys in the chat room, I'll be there in just a couple of minutes. We'll take a little bio break, and then I'll be there.
All right, excellent, guys. I'll keep monitoring my Tesla trade, and we will see you in the chat in a few minutes and in the morning for the pre-market show. Take care, guys. Have a good one.
Trade smart, everyone.